let's talk oil and natural gas with our great friend Kevin Kerr of Kerr Trading and editor of Resource Trader Alert. Our brilliant panel is still with us. First up, this is some sound from my hero, Boone Pickens, a great American, this morning on the network. Please listen.
I'm ready to go for everything to help us and to get away from the import of 70% of our oil.
So you say drill everywhere?
I say, yeah, let's go ahead and do it.
That is a wonderful discussion of drill, drill, drill. Kevin Kerr, howdy do. There are trillions of cubic feet of natural gas, Kevin, which is what Boone is talking about. What's your take on this? I mean, to me, this is so clear and easy, and you can convert natural gas. It's not just for electricity. It's for mass transit, and it's going to be for automobiles.
Well, what I want to know, first of all, can we write him in as a candidate?
Oh, God, he's so great.
I mean, neither of the candidates have said anything as simple and straightforward as this. If one of them would come out with a strong message, we are going to do what we have to do, just as Mr. Pickens has, I mean, it would be very impressive, and I would probably vote for one of them.
What's your take, Kevin? $9 down in the last 48 hours. Is this just, you know, a correction from an overbought market, or is something going on here, or what?
Well, you know, you're not talked about this, and we've seen the dollar strengthen a bit here. That's certainly having an impact. I wouldn't call $9 in a market that's moved this far, this fast. I mean, we're double the price we were a year ago. And we're seeing $5 moves in this market. So I don't want to put too much into it. We also had this hurricane news that it kind of is going to pass, you know, the Gulf. It's not going to hit this time. That supposedly relaxed the market a little bit. I would say, though, that the stronger dollar is starting to have that impact.
I got to put up a very quick chart. Then I want to move on to Henry Paulson. I've got oil in inflation-adjusted constant dollars. And it's very interesting. As soon as it passed the old high, bad things started to happen. If we can get that chart up on the full screen. The peak in, these are 2008 dollars. The 1980 peak was about $90 a barrel, okay? Now, if you look at that thing, now that's not exactly the chart we have because we have the 1980 peak in there, but whatever. As soon as, yeah, that's the wrong chart. All right, I'm sorry, we don't have the right chart. The reality is, in the fourth quarter of 2007 and the first quarter of 2008, Kevin, we surpassed the old 1980 peak in real dollars. And that's when the trouble started. Stocks down, economy down, inflation up. Is that a DMZ line, $90 a barrel in today's dollars, which is inflation adjusted?
Yeah, I think it is, Larry. And, you know, a lot of things are different now. You know, we do have to adjust our thinking a bit. I don't think we're going to see a huge drop back down to below even 100. I think even Boone Pickens has said that. That's going to be a tough putt to get back down there. But if we do start to bring on these other supply lines, if we do start to see the reduction in usage, you know, oil is going to certainly fall far and fast. And we're already seeing it.
There's the constant dollar chart. Look at it. 1980, the peak was $93. That's in today's dollars, okay? So it's below that for a good long while, like over 20 years. Now, look what happens. In late 07 and the first half of 08, we beat the prior peak, and bad things happen. Can I just get one quick thing in here? Can we do the Paulson? So I want you to hear Paulson on bottoming home prices. This is so fascinating. Please take a listen.
Reported average home sales price is a mix of foreclosure prices and more normal sales prices. Consequently, the prices homeowners realize when selling their home may not be as depressed as the headlines suggest.
All right, we are short of time. We may not be able to totally get in touch with our feelings. We have a chart we're going to put up on the screen that shows today's pending home sales parallels existing home sales, and they are both creating a bottoming pattern. Quentin Hardy, Paulson says there's overcounting of foreclosures and the price weakness is overstated, which is a nice way of saying we are in a bottoming pattern. What do you make of this?
Well, so he's telling me that there's a market into which people are selling houses and the banks are dumping and selling them really cheap, but somehow other people are selling houses and getting better prices than what the banks are getting. Well, maybe, except the banks aren't exactly running out of inventory to sell, so it'll continue at that rate for a while and really force sellers, as the summer goes on, the big sales season, to cut prices as well.
But
that's how markets work.
Jerry Bowyer, but Paulson's making a cleverer point. He's saying these broad indexes are not giving us the truth because the foreclosure sales at highly depressed prices are distorting the whole rest of the country, Jerry. I give Paulson credit on this.
Yes, foreclosure sales are more distressed sales than normal sales, even in a down market. There's frequently damage to the property. There are time limits involved.
But what makes you think supply of foreclosures is going away? You don't find out what's going on in the economy in general by going to the sheriff's sale. You find out what's happening in the worst parts by going to the sheriff's sale. All right, hang on. You guys are coming back. You guys are coming back. I'm out of time. I'm dead up against it. Kevin Kerr, thank you for your commentary. David Malpass, thank you, and all the best again in your new capitalist entrepreneurial